How's it going, everyone? Welcome to the sweep. We're going to get started here today with our part 4 of our series here, what is day trading, and this is essentially an introduction to day trading. So if you guys have been following the session, we kind of took it from, the very simple, basic things, some of the tools that you need, resources, how to use them, how to count pips, so on and so forth. So today, we're going to wrap up this series with backtesting. And we're going to take a very simple approach to backtesting. And so this is, to be clear, this is not how our traders that go through our program backtest. This is a more simplified version for, so you can get accustomed to going back and looking at your setup and trying to figure out what works mathematically and scientifically across multiple conditions. And so we're going to talk about what those conditions are and how we can collect this information. As always, follow us on social media, facebook.com/daytradesmart, instagram.com/daytradesmart1, youtube.com/the proving ground, and we'll actually talk about what the proving ground is, what that means. And then you can also reach out to us via email, info@daytradesmart.com. Obviously, you can also just go to daytradesmart.com as well. All right, let's get it started, guys. So again, we're going to talk about simple backtesting today. And this is just a really simple approach. To be honest, it's a more time-consuming approach, but it is a way to just kind of get you used to the process and how you would set up a chart to backtest, what resources you might need, how far back to go, what information to collect, so on and so forth. So let's go ahead and get started. So what backtesting is and what it isn't, right? So that's important to understand because there's a lot of information out there, guys. There's tons of information. You can go right now onto YouTube, other YouTube channels. You can just Google backtesting in YouTube, and you're not going to find the information, even just the simple information that I'm going to give you here today, right now. All right, and I want to challenge you guys to do that. Take this information and then go back and see what everyone else is saying about what backtesting is. And after we explain what it is and how it's useful, you'll realize really quickly that all that other stuff is white noise. It's nothing. It's a waste of time. And that's I'm not being facetious. It's literally a waste of time. It's pointless to do those things for the sake of backtesting. Okay? So what it isn't. Backtesting isn't just something we do to practice our setup. That's not just what it is. That's a byproduct of it, right? In being able to go back and see our setup and and be able to identify it. That's great. It's a byproduct of that, but that's not the purpose, the main primary objective of backtesting, right? What it isn't is it isn't something we do to prove what we already assume. Okay, so we don't have an assumption and we go back and we say, okay, this assumption is correct or it's incorrect, right? More than anything, when we do proper backtesting, we go with the clean slate. We know what our setup is, and then we go to find out how that performs and let it tell us how to trade it, right? So we create that blueprint. Now today, we are just going to have an assumption, right? And the reason why we don't like to lead with that is because if you have an assumption when you get to the end of your data set, if it doesn't make profit, then you've got to go back through and reassign a different set of parameters until you find one that works, which is very, very time consuming, right? It takes a lot longer to do it that way than the proper way. Now, I do want to let you know, if you guys are expecting that I'm just going to release that right now and let you guys know what that is right now, it's not going to happen. I've got a challenge out there for you guys. I want 1,000 subscribers, and then I'll give it to you. It's valuable information. It's the most valuable thing that you will learn in day trading. The most valuable, hands down, bar none. Every successful day trader that is successful adheres to those disciplines. Okay? And I'm not just going to give it away. So 1,000 subscribers, do what you can to get me there, and I'll give you what you want, and that will be proper backtesting, the whole blueprint on how to backtest. After you learn that, you can literally take any setup you want, anything that anybody ever tells you, and know exactly how to run it through the ringer and figure out how it works for you, specifically the times you trade, the currency pair you trade, or the market you trade, the whole gambit, right? So finally, backtesting isn't optional, right? It is not optional. If you're not willing to backtest, or you have some backtest data that you're relying on, which I wouldn't, recommend either. For one, there's a lot of byproduct education you get from backtesting, but for two, you have to absolutely trust the individual that gave you that backtesting data, right? And see that it works. And there's ways to front test it after you've come to a conclusion as to what those parameters should be. There is a way that you can test those parameters, and we will talk about that. But it isn't optional. You do it, or you just won't be successful at day trading. So it really is that cut and dry. So what is backtesting then? Backtesting is the method of historically tracing your trade setup to determine a mathematical and scientific output. Simply put, it's a way to predict how your trade will set up with I made something, I mistyped something there, but how your trade setup will perform in various market conditions, not with perform. So how it will perform in various market conditions. Okay, so that's why we backtest. It's not just to practice, right? It's to know what our stop loss, what our take profit should be, how big our trade should be when we put in that trade, right? And we've talked about a lot of this. It doesn't matter if it's a small scalp trade or a large, big trade. For one, both of them can be worth the same. In other scenarios, the one with lesser movement can be worth more. In other scenarios, the one with more movement can be worth more, right? It's all based on how you backtest it, what the win percentage is, what the risk reward is, what the risk percentage is, right? So we backtest to figure out what those numbers are. We don't guess them. We don't just take somebody's word for it. That's not how you're successful at day trading. So setup and data collection, right? So what do we need to set up, and what information do we need to collect? So establish what you will be backtesting. So what parameters will you be looking for that will indicate a trade setting up, right? Whether it's price action or trend or whatever it might be. If you're using an indicator, what you're waiting for that indicator to show or that price to hit, whatever it might be, that says, okay, now is the time to trade. And be very clear about what those parameters are. There's three possible answers when you ask yourself the question, is this my setup? The answer could be yes, this is my setup. No, this is not my setup. Or maybe this is my setup. So yeses are yeses, no's are no's, maybes are no's. It's a no. If it's a maybe, then it's a no. Right? You want to be very clear about what your setup is. And you want it to be uniform, okay? So establish what you will be backtesting. What is your setup? Determine what times of day for which you'll be trading. This is important because the market, let's say in Forex, we're going to use Forex, we're going to continue to use Forex, okay? So each currency pair, just like each market, each different type of market or stock or whatever it might be, moves differently, right? And with currency pairs, they move differently at different times of the day. So foreign exchange, the Forex market is moving 24 hours a day, 5 days a week. So every part of the day, from midnight to say, well, that's mountain time. So let's say 2 a.m. to say 8 a.m., the market moves differently than it's going to move, say, from 1 p.m. to 7 p.m. right? So you want to be cognizant of that. What times are you available to trade? Not what times you'd like to trade, not what times you think are best, because the times that are best are the times that you're available. Don't let anybody tell you different. There's no cookie cutter universal time that's best, right? That's not a relevant argument, right? The market's moving faster at these times, so that's when you want to trade. No, none of that matters. Believe me, none of that matters, okay? What matters is what your risk appetite is, what your personality is like, what times you're available. If you're working from 9 to 5, 8 to 6, whatever it might be, and before you get there, you're commuting or you're getting ready for work, then those aren't the times that you're available to trade. If you're at work throughout the day and you get home at 5 o'clock, 6, 7 o'clock, whatever time, right? And when you get home, you have dinner, you hang out with the kids, or you hang out with your spouse, or whatever it may be. Those aren't the times, right? Now, if you're sitting around watching television or surfing social media, that's a good time. Replace that time with something productive like day trading. That's the time. And if that's 7 p.m. to 10 p.m. before you go to sleep, then that's the time for you. That's the best time, right? It's uninterrupted time. It's the best time that you have that's available for you to trade. So you would test those times, 7 p.m. to 10 p.m., because how the market moves on that currency pair is going to be relevant for you from 7 to 10, right? So why would you test anything outside of that? The market moves differently outside of those times, right? So why would you even bother testing any of those times? Those aren't the times that you're going to be trading, and you don't want to have to use that data when determining what your stop loss and take profit would be if those aren't the times that you're available to trade, okay? Choose one currency pair to test at a time, okay? So just one at a time, or one market, like if you're going to trade the SPY, the Russell, the S&P, whatever, just one at a time. You can't aggregate them. They all move differently. You can't use the same parameters for everything across the board. You can try. I mean, you absolutely can. You can do it, but you can't succeed doing it that way. It's not likely. It's a mathematical improbability that it'll work that way. Okay, maybe you get lucky, but are you really trying to get lucky, or are you trying to do things the correct way? And if you're just trying to get lucky and you think this is day trading is a get rich quick type of thing, pack it in. Day trading is not for you. Take your money, go to Vegas, have some fun, enjoy life, get it over with quickly like a Band-Aid, lose the money, go home, lick your wounds, and decide what you're going to do from there. But day trading is not for you. So if that's your mindset, I'm going to do you a favor and say don't waste any more of your time. And I don't mean just with us, with what I'm showing you, with day trading in general. It's just that's not what it is, right? Okay, so you're going to choose one currency pair to test. Why? Because each currency pair moves differently, right? And even at the same time, they move differently. At the same time of day, 7 to 10, you could be trading two different currency pairs, and the movement in them are going to be different, right? Some of them have higher volumes. They move larger. Others move smaller, right? So no two are the same. So you do one at a time, and the data that you collect for that one is only relevant for that one. And then you redo it for a different pair or a different setup on the same pair, whatever it might be. But it's only relevant for that one, okay? Use a charting software that will allow you to go back to January 2016. Okay, so you take your chart all the way back to January 1st, or the first trade day in January 2016. Okay, and then you look for your setup at that specific time, at the time that you're available to trade on the specific currency pair with which you'll be testing every day until December 2020. That's 5 years. 5 years, January to December of 2016, January to December of 2017, 2018, 2019, 2020. Now, before 2020, it was 15 to 19. Before, even 2015, it was a different, set of years. And then I'll explain why we have that time frame. But that's what we refer to as the proving ground. It is the ground with which we prove our setup. And right now, that is January 2016 to December 2020. That is the proving ground. Okay, hence the name, The Proving Ground, youtube.com/The Proving Ground, right? Okay. For simple backtesting, decide what stop loss and take profit you will be testing. When you see your setup at the appropriate time, check to see if you would have taken profit before hitting stop loss. This is the simplest way to do it. Again, when you get to the end of that data set, if you don't have a risk reward that is profitable within the win percentage that you hit it at, then you're forced to have to go back through the data again, right, and test again. So just this process right here, for let's say a 60-minute setup, a 60-minute chart you have a setup on, you're looking at probably 3 to 5 hours of backtesting, just to go back and make tally marks, right? Did I, so it's kind of like this, win, loss. It's like, okay, yes, I won, I lost, right? Whoops, one more. I won, so on and so forth. And then at the end, you add them all up, right? So you have like, 350 total, right? Whatever it is. And then, 100 of them lose. So you figure out your win rate, right? So then you have your win rate because you know that 250 of them win. So 250, what is that percentage, right? 250 of 350, whatever that percentage is your win rate, your win percentage, right? Now, if let's say you find that out of those 350 trades or 3,000, however many there are, right? You have, you can win 60% of them with the parameters that you've allocated, which let's just say we say, okay, well, we're just going to go and back test this and we're going to say we have a 10 pip stop loss and a 5 pip take profit, which is a 2-to-1 ratio, right? 2-to-1 risk is 10, reward is 5, right? Okay. And we would win 60% of those trades if we use these parameters, okay? That would not be mathematically profitable. It's not because I said so. It's just not. It's not going to be profitable for you, right? You guys in earlier sessions, you guys have seen these examples, right? But I'll show you really quickly. Why would this not work? Just hypothetically, if this is what we found. Well, let's say we took 10 trades. Obviously, if it works for 10, it's going to be the same for 100 or 1,000 or a million, right? We win 6 of those 10 for what? 5 pips, right? So each of those trades we won, and we made 5 pips on each of those. 6 times 5 is 30. We lose 4 of them for how much? 10. So 4 times 4 trades that we lost, 10 pips each, is 40, right? Negative 40. So 40 and 30, you have negative 10. That is not a winning formula, right? You can't win with that. You'd have to hit at least 70%, right? So then you might think to yourself, well, what if I just decrease this number? Well, if you decrease that number, how much does it decrease that number, right? So let's say you decide, okay, well, instead of doing a 10 pip, I'm not going to check. I'm just going to decide in my brain that I'm just going to use a 5 pip stop loss, right? And a 5 pip take profit, which is a 1-to-1 ratio. That would work with 60%, but do you win that trade 60% of the time with a 1-to-1 ratio, 5 stop loss, 5 take profit? So what do you have to do? You have to go back to your data, January 2016, all the way to December 2020, and check to see if a 5 pip stop loss and a 5 pip take profit would win more than, in this scenario, you'd have to win more than 55% of the time, right? Because if you won 50% of the time, and you guys, again, this is all review, right? You guys should know this stuff right now. If you won 50% of the time, then this would be 5, right? Which this would be 25. And this would be 5. And this right here would be a 5 pip take profit. So you won 5 of these trades for 5 pips. You lost 5 of these trades for 5 pips, which would also equal 25, right? And that would be break even. So that would be 0. But is it really 0? We know it is not, right? Because every single one of those 10 trades, we paid a commission on. And if your commission was, let's just say, $1, per trade, well, then you're actually negative $10, right? Is that ever going to work out for you? No, it doesn't matter how many times you take it. You might have some instances where you hit a winning streak and now you're positive, right? But at that point, are you just going to quit and walk away? No, you're going to keep on trading, which means eventually those numbers are going to play out and you're going to lose money, right? And I don't know about you guys, but for me, day trading was about not just making money, but making a significant amount of money, not just a few bucks so I could say, oh, I'm successful at day trading because I make money. No, I want money that I can spend and change my lifestyle or change the lifestyle of my family and generations to come. That's the kind of money that we want to earn, right? We want to be able to create more time for ourselves to enjoy life and have the financial resources to be able to enjoy it, right? Okay. So simple backtesting, that's kind of the process. We go through it and we figure out whether or not that is going to work for us. Now, there's a better way of doing it, but we're not going to discuss that today, right? We're just going to do this simple approach today, okay? So why? Why do we do all of that? Why do we go back that far? Why do we collect, the specific times, so on and so forth? Well, consider what we've learned about day trading statistics, okay? So remember, we talked about over 95% of individuals who attempt to day trade fail. Over 95% of individuals. So that means that if there were 1,000 people watching this right now, over 950 of them would fail at trying to become a day trader. So are you the less than 5%, or are you the above 95%? Let's say you are the less than 5%, and you decide you want to do it however way you see fit. Well, we also know that the average win percentage of a successful day trader is 50 to 55%, and it takes an average of 5 to 7 years to learn how to day trade. So great, you're going to be one of the less than 5%. Well, then in 5 to 7 years, you'll figure out how to be profitable, and then it'll take you another couple of years to actually make significant amounts of money. Okay, so, it's a good 7 to 10 year plan, right? So get started. Okay, but there's a better way, guys. There's a better way. Why? Why does it take 5 to 7 years? Why are the average win percentages 50 to 55%? Why are over 95% of individuals failing? You don't have to be that. But why is this happening? Well, it's simple. Most day traders don't know how to backtest properly. That's a fact. That's a fact. And you can go and look it up. Over 95% of the information that's out there, YouTube, other programs, believe me, I'm not one to dog other programs because there are some good ones out there. But the vast majority of them are garbage. And if you've got a guru or you got somebody that you say is just an awesome day trader, that's great. Maybe they are. Maybe they did the 5 to 7 year march. Maybe they've figured it out, but it's not duplicatable. Now they're just trying to sell you a hoop dream, right? You can't do what they do unless you go back and spend all the time that they spent doing it, right? It's just the way it is. And believe me, send them my way. I'll have that conversation. I do it all the time. I talk to these types of people all the time. And when they're done, it's amicable and they realize I'm right. And it's not because I invented it, right? I didn't invent any of this. I just realized it. Now I'm sharing that with you, right? So most day traders don't know how to backtest properly. They learn a setup, then try to trade it in the markets, right? And maybe some of you guys can, agree with this. Maybe this has been your journey, right? So you learn something. You're like all excited about it, and you put money into a brokerage, and you try it out, and it fails. So then what do? You take it back and you tweak it, right? You learned a few things, okay? And you do it again, and it fails. And so then you tweak it some more. And then you try it again and it fails, and you tweak it some more and some more and some more and so on and so forth and so on, right? So if you have the mental fortitude, if you have the bankroll, if you have the ability to continue to do this for 5 to 7 years, guess what? At that point, if you've culminated all of that data, you will have possibly an answer. You'll possibly have an answer if you've lasted that long, because within that time, you've seen all the different cycles the market goes through. You've seen trending up, trending down, bias in one direction, bias in the other direction, short-term in trends, short-term bias in either direction, consolidation short-term, consolidation long-term. Those are the only ways the market moves overall. There's no other way. Those are all the ways, right? The market either moves up, down, or sideways. When it moves up, it trends up, or it just continues up for a really long time. And when it moves down, it trends down, or it just continues down for a really long time. When it moves sideways, it consolidates for a little bit of time or a lot of bit of time. But there's no other way. It doesn't move backwards, right? It can't trend both up and down simultaneously. It does one or the other of any of those things. So can we go back then, instead of having to learn, by having to suffer through it and losing a whole bunch of money, can we then just go back and look at those market conditions and test our setup by back testing, right? Do you see how this all correlates? We don't have to learn by falling a million times over 5 to 7 years waiting for each of these market conditions to occur. They've already occurred in the past. Let's just test how our setup works in those conditions using the past, right? Learn from other mistakes or learn from other experience. In this case, learn from what's already happened, right? Okay. So this is caused by, among other things, the overall market conditions shifting beneath their feet, right? They have to go back and tweak, and then it shifts again. And maybe sometimes they'll have a setup that works really well for a long time, months maybe even, right? Which is, quite honest, the worst thing that could ever happen to a day trader. And we've talked about this, right? You do something that you shouldn't be doing, and it works. Because then your brain gets that dopamine, it convinces itself that that is the way, and it is very difficult, next to impossible, to break that from someone. It is next to impossible to break that from someone because you're convinced that you've got it figured out. Now you just have to keep that but continue to tweak it. Little do you know that the thing that made you, that short-term success is the exact same thing that is now causing you to lose. Okay? So just remember that, because you'll fall into some of these pitfalls in your journey if you haven't already, right? So they repeat this process for 5+ years until they experience the varying market conditions and are finally able to make the correct adjustments for all overall conditions, right? If you last that long. Now you see why we use the analogy. Are you going to go on the Oregon Trail, from the East Coast to the West Coast, in horse and buggy, or are you just going to take a jet engine, right? You're going to take a commercial airline. You're going to take a private jet, right? You're going to take anything that flies. I mean, a car would even be faster, right? But that's the difference. 5 to 7 years to just figure it out, right? Or a small amount of time, say 6 weeks, 6 to 9 weeks to figure it out, right? And then and everything else that you need to know. And then go into the market and start earning money. And then within a year, as little as 6 months for some, but within a year, 6 months, a year, 2 years is pretty consistent as well. You're there. You've not only supplemented your income, but now you've replaced your income, and now you're building wealth. Right? So imagine being able to do in an hour a day or less, in terms of finances, let's just say that you day trading is only capable of giving you exactly what you earn right now. Whatever your income is, weekly, monthly, annually, whatever that dollar amount is, day trading can do that. Let's just say that day trading can do that exact same thing, right? Just that exact same amount. But you can do it through day trading in an hour or less a day versus 40, 50, 60 hours a week. That's valuable. I don't think anybody would say that's not valuable. Now, what do we know about day trading? That it's obviously capable of doing vastly more than that, right? Not just replacing your income, not just supplementing your income, but being able to build wealth and give you a different level of comfortability in life, right? If you could do that and have plenty of time to enjoy it, believe me, I would be, and you would be hard-pressed to find anybody that would argue that that is not the most ideal situation in life. It is absolutely the most ideal. The other great part about day trading is that it didn't matter for me or for my members that the pandemic happened. It didn't matter in 2008 when we got started that things were going to hell in a handbasket in the markets. We were winning in 2008. We were winning in 2008. That's when we got our start with all of this, right? 2016, 2011, right? It didn't matter if things were going sideways or crazy in the markets. We were still making money. We were still making money just like we did the previous years, right? So you consider that it's bubble proof, it's recession proof, it's all those things that we concern ourselves with when it comes to our livelihood. I mean, when things shut down, you were stuck at home. I was stuck at home. You couldn't go to work. There was no choice of getting another job or working harder or putting in more hours for some people. It was, you cannot earn money. That's it. You cannot. I will never, ever allow anybody to dictate whether or not I can earn money. Not anymore. Never, ever, ever. It will never be, well, maybe my boss has a beef with me, or I don't like the employees that I work with, and I'm afraid that I'm going to lose my temper or say something that I shouldn't, or whatever, right? And I'm going to lose that job, or they're going to go out of business, or they're going to make cutbacks, or a pandemic happens, or something else happens that is outside of my control, right? No way. If I know how to day trade, as long as I can day trade, I have control as to whether or not I earn, right? That is liberating. That is freeing, right? And you realize it becomes less and less about money. Is money important? Absolutely. Yeah, of course, we need that, right? We need to pay our bills. We need to, keep the light on, keep food in our belly, right? Yeah, I'm not downplaying that. But you realize that there are bigger things at stake that we forfeit for the sake of putting food in our belly and keeping a roof over our head, because there's no choice, right? And that's why a lot of people look to day trading, but 95%+ of them fail. So how do we get to the less than 5% without having to spend 5 to 7 years to do it? I'm telling you right here, it's backtesting. It's backtesting. So here are the resources you need. WorldTimeBuddy.com. I'll show you why you need that here in a moment. A spreadsheet, whether it's, I would not recommend doing it on a piece of paper, right? Have it somewhere digital like Excel, Google Spreadsheets, anything else that's similar to those, right? So you'll want some type of spreadsheet. Reliable trade setup, right? That's important. You want something that actually works and is consistent, right? Otherwise, you spend your time backtesting something that's not very reliable. It's going to take you forever to actually build anything significant unless you start with a really big account balance, right? If you're starting off with, $250,000, well, great. You probably get to somewhere significant much quicker. However, if you're starting off with $250,000 and you have that disposable income, then replacing whatever your income is at that point is still going to take relatively the same amount of time as it would if you're making $30,000, right? So reliable trade setup is important. Patience and discipline. Have patience. Be disciplined, right? This is my setup. Is it a yes? Is it a maybe? Is it a no? Be disciplined. Backtest. Do the hard things. Okay? All right. So before we get to that, let's talk about how we backtest. Okay. So I've got a spreadsheet here. This is simple backtesting. The things that I want to record are the date, the time, the direction, whether it won or lost, and any notes that I think are relevant, right? So let's say we're going to backtest the Euro USD, right? Because those are one of the things that we needed to prepare for. What currency pair are we going to backtest, or what market we're going to backtest? Market times, let's say that I'm available, let's just say 7 p.m. because we use that 7 p.m. To 10 p.m. And this is going to be MST, Mountain Standard Time. Okay. So actually, this is my execution time. These are the times I'm available. So I'm going to copy that, put it there, paste. That's when I'm actually going to be, I want to be in a trade, which means I'm going to test the 6 p.m. to 9 p.m. candle, because I want to see how that one ended, because that's what gives me my indication of what to do at 7 p.m. So I want to see how the 6 p.m. candle ends, the 7 p.m., 8 p.m., and 9 p.m. candle end, so I can take a trade at 7, 8, 9, and 10, right? Now, the Forex market runs on UTC, Universal Coordinated Time. So right now, the offset from UTC in spring is +5 EST. That means if you are at, let's just say, right now it's 5:30 Eastern. So if you're at 5:30 Eastern, right? Then UTC, Universal Coordinated Time, is at 10:30, right? Actually, it would actually be not 10:30, but it would be 22:30, right? It would be 22:30 or 10:30, depending on how it shows for you. It'd be 22:30. So a good way to figure that out and use that is with World Time Buddy. So worldtimebuddy.com. I can put in UTC, and I can put in Mountain, which is my time, and I can see that right now it's 15:35 my time, 3:35, and it's 21:35 UTC. Right? Now, if I'm backtesting, say we said 7 p.m. Mountain, 7 p.m. I want to trade 7 p.m. to 10 p.m. So I want to test 6 p.m. to 9 p.m. Mountain time. Well, 6 is 1800. So right here, Mountain, I'm going to go to 1800 right there, and that's going to be 0200 UTC. So I'm going to test 18, 19, and 20, right? 6, 7, 8, and 9. So that's going to be, or sorry, that's not 2, that's April 2nd. That's going to be 0, which is midnight, UTC, 1, 2, and 3. Okay? So that's going to be here. I'm going to trade for spring. I'm going to be trading 0 to 3, 0300 UTC. And this is spring. And then fall, when our clocks fall back, it's going to be a 7-hour difference. Okay, so right now it's 6-hour difference. So 6 to 0 is 6 hours, which is midnight. And 6 in the fall, it would be 7 hours. So this would be in the fall 100, right, to 0400 UTC. So those are the times that I'll be testing for, right? These times, if I'm testing the Forex market, and my time is 6 to 9. So these are for 6 to 9. I want to be in a trade from 7 to 10. So I'm going to test how the 6, 7, 8, and 9 candle end so I can possibly get in on the 7, 8, and 9, 10 candle. Right? At the beginning of those, the end of these, beginning of these. These are these. In spring, it's 0 to 3 and 1 to 4. Right? So why do we need to break it down that way? Well, because UTC doesn't move, but we move. Right? So we go 7 hours away from it, or 6 hours, 1 hour closer, which would be 6 hours away from it. Right? In the spring, so right now, we are 6 hours from UTC, and in the fall, we're 7 hours. So in November, we'd be 7 hours away. Right? Okay, so let's look at how that plays out on our chart. What I have here is a 1 minute, a 5 minute, a 60 minute for spring, 1, 5, and 60 for fall. So these times are set for fall times, and these other charts are set for spring times. So I take my chart, I go all the way back to the first trade day of 2016. Okay, so right about right about here, right? That's the first hour of the first trade day of 2016. Okay. Let's say we're just going to do something simple. We'll just make something up. When these lines, so we'll do half a classic. We won't do the whole classic. We'll just do half of it, because part of the classic is explaining and understanding the nuances. But we're not going to do that. We're just going to take something really, really simple from these indicators. It's not even a real thing. I'm just going to make it up. But we want to see when these lines are simultaneously cross up together. That's all. Right? It works really good on the futures market, better with pressure, but this is the Forex. So both of these lines are not crossed, they're oversold, and then they cross up together. Or if they're overbought, they're not crossed in the previous candle, and then all together they cross and point down together. Those will be our points, right? Now, what's cool about having a charting software is you can set up different things that will help with the back testing. For one, this one I can highlight time ranges. Okay, so I'm going to put this over here just so I can do this quickly. But so I'm going to go to Studies, and then I'm going to go to Time Range Highlight. I'm going to add 2 of those. Actually, I'm not going to add 2 yet. Remove 1. Okay, so I want this to highlight in gray, highlight the background in gray every time the times that I'm available to trade are visible. Now this is fall because I'm in January, so I want to be looking at my fall charts, right? And in fall, I'm going 0100 to 0400. So this would be 23, 59, and 59, and then actually no, 0100. So this would actually be 00, and then this would be 1. Actually, 10-second delay. Okay, and then so I'll just put this one for 1. Apply. Okay, and then I'll duplicate that, and I'll do another one for 2. So 2. Oh, sorry, that would be 1, and this would be 2. And then we'll do 3, so duplicate. So this would go to 2, and this would be 3. And then finally 4. Let's go to 3. And this will go to 4. Okay. So now if I go back to, there's 1 o'clock, or 100, that's the fall time, 2, 3, 4, and then no more gray. So as I'm going back, I can go back and say, okay, I'm looking to see when these lines are below this red line. So they are currently below that red line. And they cross simultaneously like that. That one crossed, you see the cross right there and cross right there, simultaneously and point up, okay? And I want that to happen when this background is gray, okay? I could even go as far as to program that in this charting software so that the candle is actually a different color, so that I'm just looking for the candle and the gray. So I can make that candle be a different color if these follow those parameters that I just explained. I mean, so that's how detailed I can make this if I need to, but we'll keep it simple. So here it is. Here's the setup, right? And it's within the times that we are allocated to trade on the euro versus US dollar. Okay, so now we're taking the overall market conditions, right? So if we look at, let me just show you, if we look at So clean chart. Tighten this up. We can see that within that time frame, right, which would be 2016. So here is, 2016, and then here's 2020. Right about there, right? All these, and this is true for all these different currency pairs. We had trending, right? We had bias. We had smaller trends within that. We had consolidation, long-term consolidation. We had short-term consolidation, right? We had all of those different market conditions in that time. There's no other different market condition. Did we have all these different market conditions just here in a year? No. What about just here? No. What about just here? No. We needed all of this. And that's repetitious. We'll see that those types of conditions occur in 5 to 7 year blocks. Right now we're fortunate because we're within a 5-year block, and we've been in a 5-year block for quite some time. So that's why so now, one, we're accounting for specific market overall market conditions, right? Two, we're accounting for how that currency pair moves in all those different market conditions at these specific times with this specific condition, right? So that's what we call representative data, right? It's all points are being represented. Okay, and that's when we're building predictive models, we need a representative sampling. So we need all those conditions to be represented. And we have them represented, which is why we use this. Believe me, guys, try to find this information somewhere else. You won't find it. You won't find it. But you'll understand really quickly why it is absolutely imperative and why it works better than anything else. Right? Okay. So I want the date and the time that trade setup occurred. 1/4/16 at 0100. Right? So this is going to be UTC. So 1/4/16 at 100. Right? Direction. 1 is buy, 2 is sell. So we're just going to put a 1 right there. Now, we said that we're going to just collect whether or not it won or lost. Okay? So to do that, we need to determine what a winner would be and what a loser would be. Okay? So let's say we want to test, let's just say, a 5-pip take profit and a 5-pip stop loss. Okay? A 1-to-1. All right? Which means we'd have to hit better than 50% to be able to use that. Now, does that mean that's the best scenario? No, it just means that it's one that works. There's a process to find the absolute best, most profitable scenario. This is not it. But I told you guys I was going to show you backtesting, right? It's not in me to show you something and not give you at least some resources to be successful. I can't, right? I answer to people too. This is my company, and I share it with my business partner, Tim Copeland, but we answer to the group, right? Because we're not dictators. We don't just decide what we're going to do. And so when we come together as the board, I'm put on notice. You don't just go giving stuff away, right? Why? Because we believe, and this is my belief as well, that which is obtained too cheaply is esteemed too lightly. It's not our saying. Can't even remember who said it. Google it. I should probably give credit to the person that said it sometime in history. But that which is obtained too cheaply is esteemed too lightly. Okay? If I tried to just give it to you, it'd be worthless. Besides that, I want to get something out of it this time. I've decided I'm going to be a little selfish about it, and I want to get something out of it because it is absolutely valuable. Absolutely. But my better nature says, let's give them something they can at least use, because you may have to go through this numerous times before you get an answer that says yes, but at least you know how to get that answer. It just may take some extra time. So buckle up, right? So did it go 5 pips up in this scenario, because we're buying, before it went 5 pips down? Let's click to the next candle. This one went up 15.3, and it went down 1.9. Okay, so yes, it won. And we'll say 1 is a winner, 2 is a loser, right? So if you want to document that, then you can say time is UTC time for this, right? Direction 1 equals buy and 2 equals sell. WL win equals 1 and loss equals 2. There. Right? Then we don't have to type that in. Besides that, we can tabulate numbers. We can't tabulate if it says win right here, W or L, because then what we end up doing is figuring out how many W's we have, how many L's we have, and then doing the tabulation where if I just have a 1 there, then I can just sort them and then count all the 1s, count all the 2s, right? So it works a little more effective, that's all. And you can do it whatever way you'd like, but I'm just giving you some examples, and then any kind of notes. So then we go to our next example. So we want to see the cross when it's above the blue, we want to see them both cross simultaneously. In other words, if the gray and black crossed right now, and then on the next candle, the green and red cross, that wouldn't count. We want them to be above the blue, and then both of them cross simultaneously at the same time, right? So again, if it's close and it's a maybe, then it's a no, right? If it's a yes, it's a yes, and obviously if it's a no, it's a no. This is a no. So let's go forward, nothing, and let's skip forward to the next day. Here we go. Do we have anything there? No. No. That already crossed. No. So that doesn't count, right? Because look, minors already crossed. Gray and black already crossed. Green and red did not. So even though here it looks like they did, this could very well be a maybe for you, right? You have to go back. Say, okay, did that cross? Yeah, that crossed. Okay, so this is a no, because a maybe is a no. So that's a no. We don't record that one, or we don't record that one, right? They look like they crossed simultaneously, but the minors had already crossed. So we'll skip that one. Okay. And then go to the next day. And did we get, nope, they were not below the red. So that one doesn't count. They crossed up simultaneously, but they were not below the red when before crossing up. So that's a no. Part of them were the gray and the green. Again, that's a maybe, right? Maybe they were, but a maybe is a no, so that's a no. Here they're crossed up simultaneously, but again, they were not below the red, so nothing. 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 Okay, let's go to the next day. All right. Right here. Let's go back. Majors were below, minors are already crossed, and they were not below the red, so nothing. Now they're overbought. Let's see if they cross down together. Minors are already crossed, so that means nothing on the next one. Nope. Okay, go to the next day. Nope, because they're not crossed. Minors are already crossed, so nothing there. Nope. So after this, obviously, if they crossed up, but would that be outside of our time? So if both of them crossed up after that, it would be outside of our time. So even if it did happen right there, we wouldn't check it because we were not trading at that time, right? So let's keep going. Okay, right here, nope, because look, they were not overbought, and they had already crossed before, so that's not one. Nope. Nope. Right? Minors are crossed, majors are not. And minors had already crossed, but it's also outside of our time. See, we've got to be specific. We've got to be specific. Okay. So right here, nope, majors are crossed, minors are not. Okay, now we're waiting for them to cross down. Right there they did, watch. Nope, actually, no, that's not true. Minors are already crossed. But even if it was there, it's outside of our time, right? It's outside of the gray area. So we do nothing. Nope. Right there, right? Look. Neither of these are crossed and pointed up yet. right here, now they're crossed and pointed up, both together after residing below the red, and it's within the gray area, within this area where we're testing, the time that we're testing. So we collect that information, right? So 1/13/2016, you can see right here, 1/13/2016 at 0200. So 1/13/16/200. And which direction? 1, right? It was a long. It was a buy. It's a buy. Now, can we go 5 before we go 5 down? That went down 4.2. It went up 3.5, so nothing yet. Let's go to the next candle. That went down 4.5. It went up 2.5, so nothing yet. That went up 6.4. That is enough to even cover spread. So that is a successful trade. It would have taken 3 hours. That may be something you want to note, right? This trade took 3 hours, right? And so right here, go back and we put, yes, we won, right? Took profit on third candle. Because it may have been 3 hours, it may have been the first, 20 minutes of that candle. We don't know, but took profit on third candle. And that's third 60-minute candle, right? Because we're using a 60-minute candle for this. Okay, let's go to the next one. Do we have anything here? Nope, they're already crossed, right? So hypothetically, if this was our time, then we would be in this trade right here because they're not crossed down. Here they are crossed down. So we would have entered at the end of this candle and been in the trade on this candle, right? But because it didn't happen on this candle, that's not our setup because it didn't happen in the time that we were looking for it to happen. So that crossed simultaneously, right? But they were not all four below the red, so that doesn't count. Okay, neither does that one because they weren't all four above the blue. So no, 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 no. And again, that one doesn't count because it's outside of our time. Besides that, majors had already crossed. No, 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 no. Why? Because majors are already crossed up. So even if both of them were crossed down and then they both crossed up, then that would be a go. But this is majors are already crossed. So here, majors had already crossed. Now minors are crossed, so that one doesn't count either, right? Okay. So right there, yep. So look, they're not crossed, they're oversold. Now they're crossed together, right? So right here is another one, 119.16 at 100. So 119.16 at 100, and this is for a buy. And did we win or lose? So that'll move both directions, 9.7 and 12.7. So we don't know if it went 5 up before it went 5 down just looking at this candle, which is why we have these candles, 5-minute candles. Because each of these, this is the last 5 minutes of this 60-minute candle, right? Which means if I click forward 1 on this 5-minute chart, I will see the first 5 minutes of that 60-minute candle, which actually both went both directions at that time too, 5.4 and 9.7. So again, it could have taken profit first before it went down, so let's find out. We have to go back to a 1-minute chart, which is why we have a 1-minute chart. Let me put that as clean chart. Okay, so this is the last 1 minute of this 60-minute. So if I click forward on this 1 minute, I'll see the first 1 minute of that 60-minute. Did it go 5 pips up before it went down by 5 pips? The answer is yes. It went 5.4 pips. In the first minute, it went 5.4 pips up and 1.4 pips down in the first minute. So right here, I have a winner, right? And then I can notate that, right? Went 5.4 up and 1.4 down in first 1 minute, right? Okay, let's go to our next example. Nope, nothing there. They were not overbought. Nope. So they're oversold. Right there, that's our setup, but it's not in the time that we're trading. So we don't even look at it, right? Here, we know that's not going to be it because that last one, it would have been impossible, right? Because we had already crossed. Okay. Nope, minors are crossed. It means the next one won't be one. This next one could be, but it's not. Green is minors are crossed, majors are not, so nothing there either. Okay. So let's go to the next day. Nope. Nope, because minors had already crossed. Nope, minors already crossed. Go to the next day. Nope. Oh, just barely, right? So look, this is a, yeah, we're not going to go into that pattern, but yeah, that's a pretty legit pattern. This is the follow-up to it. Matter of fact, so I may have already shown you guys that one, the hiccup pattern. So minors and majors are crossed. Majors barely and minors, but you can see on the previous, they were not crossed up. They are below the red. They are within our time, and now they're both crossed up. It's ugly, but it's there, right? Minors are crossed. Majors are barely crossed, but that's our setup. 122.16 at 03. So 122.16 at 0300, and this is for a long or a buy. Let's see if we go 5 up before I go 5 down. That moves 7.7 and only 0.8 up, so that's a loser, right? So right here, that gets a number 2, right? We could put in here majors were barely crossed up, right? Because then later we can at least say, well, we see a lot of that where when majors are barely crossed up, it doesn't really work out. So we could say, okay, do we want to add that to our parameters? Not only do we want them to be crossed, but we want it to be a more obvious cross. That could be a thing, right? So that's how we kind of develop other parameters as well. Okay. Let's go to the next one. Let's see. We've got nothing, 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 nothing. Okay. So once we get to the date where the time changes, and a good way to do that, guys, is really easy. You just go to Google and say time change 2016, right? There you go. We know that in March 13, 2016, the time changed. So if we wanted to even preemptively, we could go forward on our charts, you know, to that date. So let's just say, what day was it? March 13th. March 13th, 2016. So we'll go to 3/13, and right here, right, 3/13, and we could even make like a, you know, a line or something, make it really obvious, you know, whatever we need to do to show after this point, we need to switch to our spring charts, right? And then we start testing going forward using our spring charts until we get to November, right? November 6th, 2016. And then we switch back to our fall charts, all right? So what happens? We get all this data, okay? And I'm just going to make up some numbers right here for win-loss, okay, just to kind of show you guys what it would look like. So let's say we have, you know, I don't know, 1, 2, 2, 2, 1. Oh. And let's just take take this and just copy, paste. So at the end of it, we've got all of these trades that are winner, loser, right? So let's say we have, whatever, 182, right? So we can take this and say, okay, how many winners do we have and how many losers do we have, right? So we have, out of the winners, we have 90, right? And losers, we have 90. Go figure. That was completely random too. All right. So we have 180 trades, right? And out of those 180 trades, we have 90 that won and 90 that lost, right? Trades won, lost. Okay. So our win percentage is obviously going to be 50%, right? So let's say that equals that divided by that times 100. So it's 50%, right? We already knew that. It's obvious. It's 50% with a 1-to-1 risk to reward ratio, right? Is this profitable? If after we did all that, we checked 180 trades or more, and this is what we ended up with, which sounds kind of random, but it's just funny that it equaled exactly 50%. So we have 50% win rate and 101 or 1-to-1 risk to reward ratio. Okay, so if we have and this is a 5-5, right? So 5 pip stop loss, 5 pip take profit. That's our risk to reward. Okay, so if we have 90 pips that we won, and that's times 5, right? Times 5, then that would equal 45, right? And then this one would be the same. We lost 90, forgot I would do that. 90 times 5, right? Which would also equal 45. Okay? So our net pips is 0. Okay? So we won, or not 90 pips, but 90 trades or whatever, right? We won 90, we lost 90, which gave us 0. We have 180 trades that we put in. Okay? So if each of those trades cost me $1 to put in, right? So commission equals $1, right? What did it really cost me to lose those trades? It cost me $180. So did I win, lose, or break even? I lost. I didn't even break even because I had to pay to put those trades in. So even though I broke even here, I still lost. But even if I did break even and I didn't lose and I just broke even, what the heck is the point of that? What would be the point of doing that, right? You don't want to break even. That's silly. You just wasted all that time and effort just to break even? No, we're not doing that, okay? So what do we do then, right? We got to the end of our data set. We tested all these trades for, 5 years, and there's, 300-400 of them, right? What are we forced to do? Well, we're forced to go back through and start at the first trade. This time we have the date, so we can go right back to that same date. And we can say, okay, a 5 and 5 didn't work. What about a 5 and 10 or 5 and 7 or whatever it might be, right? And some of you guys might be thinking, well, what if I just take note of that early on? Okay, now you're starting to think in the right direction, although it's not enough because you'll finish that and you'll realize, oh, wait, I still have to redo it because I would have to go out more candles than that. Well, how many more? What other information could I collect? There's a whole lot more there. But this will lead to a couple things. For one, you'll do it and you'll find an answer, and that's great, because that's the idea. Whatever it is, whatever the setup is, just know it. Know what it is. Know specifically and exactly what it is and what you're looking for, and then test it using this method, right? And at the end of it, you're going to have a yes or no proposition, right? Yes, it is profitable, or no, it's not profitable. That's it. Those are the only two options you can have with this way of backtesting, okay? And if it's no, then you have to adjust this just on a guess, just on a whim, and then go and retest it again and again and again and again until you get an answer. Even what I just showed you right here is vastly faster than having to learn the hard way and take years to figure out what this should be. Years. It would take you years, right? 5 to 7 years. It's not my opinion. It's fact. That's how long it takes traders. And we know why. Now we know why, right? Okay, so we don't have to do this. This is not the jet plane, right? It's kind of a jalopy, maybe a bicycle. It's a bicycle at least, right? From, East Coast to West Coast. It's definitely not the jet plane, right? You're not going to get there as fast with this as you would with the jet plane, okay? But it's something. It's something to get you started, and it's faster than first of all, it is 100% faster than not doing it, because not doing it would equal no success in the market. And it's definitely faster than having to just trade and put real money in the market and have to just, go trade long enough that you have now traded through every different market condition, and you have the foresight to keep that information so you can analyze it after 5 to 7 years to determine what your stop loss and take profit should be, right? Much faster than that, that's for sure, right? But there's an even better way. The golden ratio analysis is the absolute best. The best and most accurate. Because although this could very well have been a yes, it doesn't mean it's the best and most profitable parameter for that trade setup for these times. Okay? But now you have the framework. Take this framework. It's yours. It's free. Have it. Take it, right? You know what you should be testing, when you should be testing, how you should be testing it at the very least. That is the framework for backtesting. How far back you should go, right? Narrowing it down to the specific times that you're available to trade, narrowing it down to one currency pair, and then collecting the information. Okay? So you're already 1,000 times better trader than you would have been without this information. I'm not exaggerating. With this information, you can be one of the less than 5% that succeed. With just this, you can be one of those people, one of the small handful of people, right, that call ourselves professional day traders that make money in the market hand over fist, year in and year out. You've got what you need right here. It doesn't get any simpler than that. It really is just a process. Now you can see, if I had a better indication that I could backtest, that was more consistent and that was more accurate, then I could get there faster and I can have a better risk, right? I can risk more per trade because I would have a better win percentage and a better risk to reward ratio, right? Now you see the value in the tools. The tools are fine. They're great. But this is where the magic happens, right? This is where it's at. This is day trading. This is the most important. You've got the framework. Have at it. Go do it. You have no excuses now as to why you would fail at day trading. If you don't do this, then you intentionally did it wrong and you sabotaged yourself and you just shouldn't day trade, right? But I would venture to guess that if you don't do this, that doing the work necessary to be successful is a habit that you have in your life, and it doesn't matter what you do, you're not going to succeed with that attitude. It's just my perception. You can be mad about it if you like. Honestly, if you're mad about it, it's probably because it's true. Because the things that hurt us the most are usually the things that are rooted somewhere in truth, right? So I'm not trying to offend you. It just is offensive. It just is, right? And if it bothers you too much, it's okay. You can change the channel. That's your right. Okay? But if you want to do this correctly, I can give you the blueprint. And I gave you the most important piece. The most important piece right here. It's not the most effective, but it will work. Do it. Try me. Go and test it out. Do it. You'll see. Get a yes. Reply back to me. Let me know that you got a yes. Matter of fact, the first person that does this with whatever their setup is, send it to me, right? Email it to me, info@daytradesmart.com. I'll send you a silver coin. It's Troy Out silver coin, stamped specifically for our company. On one side it has a bear, on the other side it has a bull, right? It's a 1 troy ounce. It's real silver. It's not fake. I'll send it to you. They're important to us in our organization, just so you know. They're something that symbolizes for a lot of our traders the pivotal moment when their financial trajectory changed, when their life changed, when their lifestyle changed, when they were able to free up time to spend with their kids and grandkids or themselves and travel and do the things that they want to do, not things that they need to do to eat. Right? It's a symbol, it's a totem for them. For a lot of us. I carry one all the time. Everywhere I go, I've got one. And I know the students because they've sent me their testimonials, and they've talked about how they carry that coin, and they'll go different places and they'll take pictures of themselves holding that coin, right? Different places of the world, doing different things, watching their kids graduate, holding that coin. Why would that coin have any significance to their child graduating, except for that child gets to go to a better college, right? But you don't know that, right? I know that when I see that coin. That represents that there is some impact day trading and I had and my organization had in the betterment of their child graduating, whether it was that they got to graduate from a better school or that they're going to be able to go on to better things after school, but they're holding up that coin because it represents, it's symbolic of something that we lent a hand to so that they can be better off and their children can be better off and their children's children and their grandchildren, so on and so forth, right? Okay, so here's the proposition. Are you ready? See if you have what it takes to day trade our corporate funds. We don't just let anybody day trade our corporate funds. Why? Because if you lose our money, we don't chase you down for it. We just chalk it up as a loss and move on. Because we're confident that what we do is successful, but we don't accept everyone. We want good students. We want people that show up to appointments. We want people that are teachable. You have to be both of those things, right? We want you to be able to see that it's something that you can do, that it's valuable, that it meets a personal need, okay? And for right now, what we're doing is we're doing it for free. Free. You can go to this website. You can sign up for free. And you're going to get an onboarding, so you're going to get the software, the best indicators in the industry. That's not my opinion. That's a fact, right? You're going to get, obviously we're going to teach you how to use that. We're going to do an onboarding where we set this stuff up, set you up with demo accounts, show you how to use everything. We're going to do one-on-one sessions. You're going to have one-on-one sessions with a professional day trader that's going to show you trade setups within these indicators and have you practice them. So you can take them in a demo account in the live market with paper money, right? You'll have access to these indicators. We're going to show you setups. We're going to have you practice them. We're going to vet you to see if you have what it takes to day trade with us. Now, I'm not going to mince words. Our program ranges anywhere from $8,000 to $25,000, which, by the way, is one of the least expensive in the industry, considering legitimate day trading education in the industry is anywhere from $20,000 to $250,000. But we make our money, part of our money is allowing people to day trade our money and keeping 20% of the profit. So you don't put up the money, we put up the money. We max fund accounts at $100,000, so $100,000, right? And you're keeping 80% of the profit that you make with our money, our training, and we keep 20%. Obviously, you can trade your own money whenever you want, and never trade our money, or trade our money and your money, or whatever you'd like, right? But you go through the program, you learn how to day trade, you get fully equipped to do so. You get the best indicators in the industry, the best coaching in the industry, and we put our money where our mouth is, and we fund you. To get to that point, you have to qualify, which is going through this Trader Lite program. Okay? This is how we qualify you. But we charge for it because it's valuable information. But right now, to you guys, it is free. $0, nothing. You don't even put in a credit card. I'll show you what the site looks like. We just built it. This is all it is. First name, last name, email, phone number, your address, how'd you hear about us, and if you have a Windows or a Mac computer, because we need to know how long the onboarding is going to take to set up. And then that's it. You submit. It comes to our team. Our team calls you up, schedules your first appointments with the one-on-one coach. Don't delay, guys. You got nothing to lose. It's $0. Know that to move to the next step, I'm not going to mince words. I'm not going to try to surprise you with it later. It's legitimate. It's anywhere from $8,000 to $25,000 to train with us. It's a legitimate offer. We're not we don't do that whole bait and switch thing. We don't hide what we're doing. It's valuable, and people pay it gladly because it's good and it works. We put our money where our mouth is. First step, though, is to try it. Most of you guys would say, oh, well, $8,000 to $25,000, can't afford that. How can you afford not to? How can you afford not to? If you're here, it's because you're serious about day trading. You want to do something with it. You can't find the right answers. I'm giving you the answer. It's just not free. It's just and anything, again, that which is obtained too cheaply is esteemed too lightly. Right? You got some skin in the game, you'll make it work. You'll show up to your appointments. You'll do the things that are necessary to be a pro day trader, and you'll change your financial trajectory. That's what I got for you guys today. I appreciate you guys joining us for this session, and we'll look forward to talking with you guys next Friday. We'll move on to something else. We'll start talking about some other things, maybe psychology or something else, but we're going to kind of transition into something that would be more universally available for individuals, for traders, not only beginner, but also intermediate and advanced traders. So we'll move on to some other stuff that will be applicable to more than just beginner traders. So again, happy trading. Thanks for joining us for the sweep, and we'll look forward to talking with you guys next Friday. Have a good one.